All right. So question here is you're under agreement on property. Your lender has ordered the appraisal. The appraisal reports come in, and the appraisal report gives a value that is above what you have your home under agreement for. In that situation, it's great. You've got instant equity.
Instant equity, yeah.
The seller of the property is not going to see your appraisal. The appraisal is sent to the borrower. You can have it sent to your realtor if you'd like to share it with them so you can check it out. But typically that's going to be, that appraisal report is between you and the lender, and it's so that the lender can verify that the collateral that's going to secure the loan is at or more valuable than the price you're going to pay for it, and in which case that's going to drive your qualification for the property. So it's great. There's no harm, nothing different, nothing special that needs to happen in that case. And you get a good buy.
Yeah, it doesn't do, I think sometimes people feel like maybe if it appraises high enough and now all of a sudden they think they have 20, let's say they were putting 10% down and the house appraises higher and now they see, oh geez, there's 20% equity here. Unfortunately, we can't capitalize on that additional equity at that moment. We're still basing the qualification, the loan to value on the actual purchase price and your down payment of 10%. Now, that being said, you fast forward 6 months, let's say a year down the line, you want to refinance, you can refinance and we'll be able to capitalize on that appraised value.
With the then current appraisal.
That's right.
Right. So the rule of thumb there is the lender is going to go by, for establishing loan to value ratio, for qualifying for PMI calculation, is going to be the lesser of appraised value or sales price. So in this case, we're talking about sales price being under appraised value exceeding sales price. Value for loan application purposes is going to be the sales price. In the case where the flip side of that would be sales price exceeds appraisal value, which is a whole different case, which would trigger which would be written in your contract, and you'll want to follow that in terms of how you can re-engage with the seller in a case like that. Diving into a scenario where home appraises for less than a sales price. So in that situation, you're going to refer to your purchase and sales agreement. It's going to talk about, did you have an appraisal contingency within your offer? You'll definitely want to get in touch with your realtor. It's something that they will address with you prior to going under agreement and signing your purchase and sales agreement, is how you want to handle the case that might come up. We've seen it anywhere from the seller coming down to the appraisal value. We've seen it where the buyer still agrees to overpay over, at the sales price, which is over the appraisal. They can do that. The lender is going to run the PMI and the qualifying based on the lesser of appraised value or sales price. So they're going to use, in that case, the case where the appraisal is underneath the sales price, they're going to use the appraisal as the qualifying factor for the loan. However, the borrower, the applicant, the buyer of the home can overpay, which they would just have to reach into their cash and put that money as cash directly from their checking savings account. We've seen areas where people will meet in the middle. Seller comes down a little bit, buyer comes up a little bit. And so you've got, those are really the three ways it would go. It's buyer goes all the way up to sales price over the appraisal. Seller comes all the way down to the appraisal, which is underneath sales price, or they meet somewhere in the middle.